Hello everyone, this is the pre-market report video for today 7th September 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday morning, first Jefferies upgraded the Reliance target price and released the statement that it got the upside potential of up to 22% from the current price level, which made the Reliance to open positive. Then about HDFC Bank, day before yesterday, UBS Group, they filed the filing with SEBI that in the last quarter, they increased their holdings in HDFC Bank by over 2.2%. This is the first positive. In addition, Rogers research team Refinitiv, based on their research, analysts compiled the report on Indian banking stocks and its potential upside. If required, please pause it and have a look. Based on their compiled report by 40 analysts, they expect HDFC Bank to increase on an average of near 29% from the Tuesday closing price, which was the highest compared to all the other bank stocks. Here, both Refinitiv and Jefferies are very well reputed international investment analysts, so always their words carries weightage. Because of that, and with some short covering, helped the HDFC Bank to trade and close positive yesterday. However, there are significant volatility in other banking stocks, which in turn made both Nifty and Bank Nifty very volatile. Here, in this graph, ignore the Nifty value. For some reason, Google Finance showing that Nifty value as 19,543, but the graph correctly pointing it out to 19,617. Anyway, then in the final hour, Tata Consumer Product announced that they're going to take over the controlling stake in Haldiram Sweet, which in turn made that stock very positive and supported both Nifty and Nifty FMCG index. It helped in the final hour for Nifty to cross 19,600. So that's the story yesterday. Because of foreign banks buying in HDFC Bank and rating upgrades supported the market in the morning, and in the final hour, FMCG stocks made it to close over 19,600. Sector wise, FMCG index, pharma, oil and gas and power index gained 0.5% each. On the other hand, metal, realty and bank indices down 0.4 to 1%. Overall, the advance second ratio was 1.1, so it's slightly more positive bias. Regarding institution, again FII were the mega sellers. The net sold for near 3,250 crore rupees, while DI too was net sellers, but they net sold for just 250 crore rupees. Honestly, I don't know how market is closing positive despite this mega net selling by FII. Anyway, at the end of the day, it's positive. That's the summary. Just for info, here not just Indian market, most of the Asian market except Korean market all closed positive. However, European market didn't do good. Based on that, US market, all three major index opened flat to negative. Then at 10 AM Eastern Time, Institute of Supply Management released the US service sector PMI and its related data. The service sector PMI data came as 54.5 against both previous and expectation of around 52.5, which means service sector expanded more than the expected value, which is really very good for Indian IT stocks. However, in the subcomponent, service sector prices increased by near 59, which means they are paying more for labors or to the cost of the product. Here, this is the direct correlated one for the consumer inflation. So now this macro increased the worries among the investors about the inflation, which in turn made all the three major index more negative. On top of that, yesterday, Chinese government told and banned all their government employees to stop using the Apple iPhone on the basis of national security concerns. This made the Apple stock very negative and it dropped over 3%. You might know Apple is an index heavyweight in all the three major index. Thus, in the end, Dow Jones decreased by 0.57%, S&P 500 down by 0.7%, while Nasdaq fell over 1%. In case of VIX, it increased 3% and moved near 14.5 from around 14. About oil, it increased further 1%. Regarding reason, no new, same Russia and Saudi oil production cut, which in turn, as per EIA report, now it created over 2 million barrels per day deficit over the consumption. In addition, yesterday Saudi Arabia, for the fourth straight month in a row, increased the minimum oil price for Asia. And at the time of this video, WTI crude oil was trading around $87.5 per barrel, while Brent crude oil was trading around $90.75 per barrel. Then about Indian areas, it just doing the catch-up game with Indian market. I mean, Infosys and Wipro closed almost exactly same place around Indian market. Then about banks, ICICI Bank's ADR closed more negative and HDFC Bank ADR closed more positive compared to the Indian market close. Regarding GIFT Nifty, early morning it closed at 19,625, now with 60 points premium indicating a gap down opening of 50 to 60 points. So this is what happened yesterday in the global market. Now let's move to the Indian market stock and sector specific. First about Reliance. Yesterday they said they received over 8,000 crore rupees from Qatar Investment Board for 1% Reliance retail share at the valuation of 8 lakh crore rupees. This is really huge positive. I mean, in the last round, Singapore, Abu Dhabi and Saudi investment valued Reliance Retail just around 4.3 to 4.5 lakh crore rupees. Now, Qatar Investment Board agreed the valuation of over 8 lakh crore rupees, which puts Reliance Retail alone $100 billion valuation. Anyway, I consider this as positive, but as an overall sector, ICRA rating downgraded the petrochemical business to negative due to their profit margin concerns. So, this is negative for whole sector. So, Reliance will trade based on which over which, but as per GDR perspective, it closed 0.75% positive. Second, yesterday, All India Pharma Association released the report that in August, pharma sector increased only by 5%, whereas in comparison last year, it increased over 14%. So clearly as a whole sector, it's not positive, but there are some stock specific positives like Lupin is going to sell their products online in US, etc. Third, today ITC's senior officials are attending the Jefferies Asia Forum and major bank representatives will be meeting the analyst in BFSI conference. So in both places, forum activities will influence the respective stocks. Finally, Lupin, Glenmark and Tata Consumer Product all got the long build-up, while JK Cement, ICICI Bank, Axis Bank and PNB all got the significant short build-up. So as usual, be cautious while trading at those. As a summary, US market closed to negative, especially Nasdaq down by over 1%, and GIFT Nifty is indicating a gap down opening of 60 points, which is not good at all, and bad global momentum. However, I know Indian IT areas close to negative, but good service payment data is always positive for Indian IT stocks, and also Reliance looks okay and multiple banks got short build-up. At some point that will create a short covering. So will Nifty close positive for the 5th straight day? Let's see. Then about the things to look out. Before our market opening, there are lots of Chinese macro data scheduled to release. Here that will determine the Asian market momentum and will affect us as well. Then during our market time, first at 11:30 am, Germany industrial production growth, and at 2:30 pm, Europe GDP and employment data is due. Then in the evening, usual US weekly jobs data and very important crude oil inventories data are due. Coming to technical, Nifty seems to be maintaining a bullish undertone as it closed positive and formed the higher highs for 4th consecutive session. In terms of candlestick, it forms another green high wave candle with a long lower shadow. Here, long lower shadow indicates buying interest at lower levels, but high wave candle indicates significant indecision and volatility in the market. Anyway, Nifty is having the bullish crossover in RSI 21-day exponential moving average and 55-day exponential moving average. So, given that context, it suggests the positive bias. Thus, Nifty is expected to target the levels of 19,700 with a strong support at 19,500. However, we cannot ignore the downside risk since it closed positive for 4th consecutive session. If Nifty breaches the 19,550 level, fresh selling pressure might kick and will push the Nifty further down to 19,500 or even 19,460. Then about Bank Nifty, it continued its downtrend but took support at 44,200 levels and recovered around 200 points. Finally, in the end, it closed at 44,409 with down 123 points, which in turn forms a red hanging man. On the downside, 44,200 proved as a strong support and Bank Nifty witnessed a sharp pullback from the support. Going forward, expects the positive momentum to continue and expect the Bank Nifty to target levels of 45,000 to 45,200 from a short-term perspective. However, at present, the daily and hourly momentum indicators are providing divergent signals which can lead to a sideways consolidation. It looks like downside is limited. If today the selling pressure resumes and the Bank Nifty breaches the 44,200 support level, then it could decline towards the next support zone of 43,900 to 44,100. Then about open interest, it's just Nifty alone. Bank Nifty expired yesterday, so I don't see the point in open interest analysis. Anyway, the maximum weekly call option open interest is at 19,700 strike, followed by 19,600. Hence, 19,700 is the resistance to break. While the maximum put option open interest was at 19,500 strike, followed by 19,400 strike. So, 19,500 is the immediate support and 19,400 is the strong support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.